after the tea break. I mean, whether it is tea or team doesn't matter. That was the break we actually took for the last 15-20 minutes or slightly more than that. So we have 2 more sessions before we break for lunch. One is the panel discussion. As I was telling you in the morning, we've done about 8 years of GST. We are in the 9th year of GST. So we are going to talk to 3 people. Like I told you, need no introduction. Venki will moderate the session. But before that, may I request your attention on this. We have amongst us, of course, he is part of the panel discussion next, Mr. D.P. Nagendra Kumar. I don't think he needs any form of introduction. It's always a privilege. In fact, I've heard people say that, whenever Mr. DPN has spoken on the dais in various other places, it's always like, guys, you should be blessed to have a commissioner, or, while he was the commissioner, chief commissioner, principal chief commissioner, it was more like you guys should be blessed to have a person like him as a principal chief commissioner. Sir, thank you for that and a lot more. And just before I came up, I was telling him, he is, of course, designated as a member technical for the GST 80. If he's going to be in Bangalore, I don't know. It's only going to make our job a little more challenging because, whenever in fact, I spoke to him about 10 days back. It was a doubt. I told him, sir, I have a doubt. May I ask you this? Knowing the clause, subclause, comma, full stop is known because I am calling him for a question. So I better know the provisions that I am talking about, right? I don't think he even paused for a millisecond. He started saying, Badri, you should look at subsection 2, phrase 3. It was like that, with 0. That is Mr. Nagendra Kumar for you. Sir, we are delighted that you are here amongst us today. Thank you so much for coming. And we want to take this opportunity to felicitate you for everything that you've been for the industry, for BCIC. So please come, sir. Please come. So please sit. His very, very, good friends, if I may say so, Mr. PVS and Shivdas. Like in one of the earlier sessions also I told you, 3 of them were on the stage at the same time on the BCIC events. I told saying frame it, it's very difficult to get 3 people in the same screen, in the same, picture. So we have that opportunity once again today. I'll take this opportunity for, to hear from Mr. Shivdas and Mr. PVS about Mr. DPN for 2 minutes. Before that, our Mr. President, so please.
It's a pleasure to have such eminent personalities with us and showing up for these events, not only coming but blessing us with their thoughts, and it is continuous our privilege to have you, sir, here again and again and again. We'll keep troubling you to be here with us, and I'm sure you will continue to listen to us. So thank you very much for joining us today, and it's a privilege to hear from you from the subject what it was more or less your baby many years ago. Thank you very much for coming here, sir.
Let's hear it from Mr. PVS. 2 sentences for Mr. DPN.
Indirect taxes and DPN are synonymous. And I have seen him in customs, excise, service tax, GST formulation. Before the law came in, how much of effort has gone from his side. All this, many of these engagements are for and on behalf of BCIC, because I had the privilege of representing before him. And every time we had a request, he was the most kind to give us that span of space, I will say, to make what are our angst, concerns, and he had really many of the changes which I find in the GST Act are thanks to the interventions Sir had made. And those are the things which have facilitated the industry today. Actually, the first reform came even when the Act came in, and some of the reforms belonged to him. But for those, the Act would have been far more stringent. He brought those reforms even at the point of 2017. And many of this which we are seeing today are those things I know he wanted to put it even in 2017. Is possibly the political consensus was not evolving. Some of them didn't come. Otherwise, I recall some of the things which are 8 years later we are seeing things which he wanted then itself. And that was the visionary we had at that point in time. It's nice to see him in the judicial role. Today is a panel which is very unique. You have a judge, you have a counsel, and you have an assessee. So that's the kind of... welcome. Thanks a lot.
So, Mr.
Sir,
Shivdas, sir,
happy to be delighted to be having you here. It's our honor to felicitate you on this occasion. We invited you for a different purpose, but this purpose is more noble than the purpose we invited for. Thanks a lot.
PVS was, as usual, always right. We would be appearing as counsel before DPN, sir. Our task will be much more tough when we appear before him.
agreed, sir.
The reason is that while we think that we have read the law, we go to him with a set of arguments. I think he would have read the law in completely a different manner and then can challenge us in terms of our understanding. So to that extent, it would be a much more challenging task when we appear before him. But I think the crux of it is, if he sits in the bench, I'm sure that whether the orders comes in our favor or against us, it could be a well-reasoned orders. We will have reasons why we are wrong or why we are right. To that extent, I think it will be a blessing to have DPN sir on the bench. Hope to argue before you fast, sir. Thank you so much. God
Sir,
bless.
with your permission, I'll just add one thing to what Shivdas sir was mentioning. It'll make it tough to an extent that, one possible way of interpreting the law is taken away. Which is, at times we say this was the intention of law. No intention of law, because he is the man who wrote it. So there is no other person who will tell you what the intention was better than him. That argument is gone, sir.
You can tell us to say, I know the intentions much better than you. That's one challenge for all of us.
Sir, may I request the President, the Senior Vice President and PVS sir to come onto the stage, please, to felicitate him. Kodi. Nime kodi.
Further time, I think we'll get on to one of the most awaited session for today. In fact, the formal introduction that I have to do, I think it is indeed a privilege when you have three stalwarts. In fact, as PVS rightly had put it, the judge, the counsel, and the assessee, right? And there is no better panel that you can have to understand the perspective of the industry as well as from the department than what we will probably hear for the next 45 minutes. I think we are at 12:05, and I think we planned at 12:45, but I think we will go for 45 minutes of Q&A, and then we'll leave floor open also so that some questions can come in. In fact, a brief introduction, because it is my duty to make sure that I do some introduction of the panel members. Skip it? Yeah. Okay, then I will straight get on to the questions, sir. In fact, my first question is to DPN, sir. In fact, sir, as everybody said, you are someone who have seen through the design of GST and seen through and its implementation as well, right? In your eyes, sir, has the implementation met its objectives?
I think if you look at the objectives of GST, I think it was threefold. One, the primary concern at that point of time was make GST for bringing an economic integration within the country, what we called as a one nation, one tax, and one market. That's the first objective. The second basic objective was basically the government was looking at introducing GST to ensure that there is revenue efficiency, because we have felt the introduction of VAT in a truncated manner or a disjointed manner between the center and the state were not adding to the tax efficiency in terms of what is the actual revenue need to be collected, is it getting collected or not. So that's from a revenue perspective. The third objective was making the goods and services competitive for both domestic consumption and also makes our products and services competitive globally. I think viewed from these three objectives behind the introduction of GST, today we see, I think, a fair amount of success in achieving those objectives. One, unifying multiplicity of taxes, multiplicity of rates, different practices followed by tax administration in terms of collecting those revenues on indirect taxes, which are essentially required to be a business neutral tax. I think a fair amount of success has been achieved. Thanks, we are at the time when technology could support in terms of bringing those changes which are transformational in nature. I think the first objective of making an one nation, one tax, I think a fair amount of success. I think when we look back 8 years, today we are not looking at anymore with regard to octroi, we are not talking about central excise, we are not talking about service tax, we are not talking about VAT with different flavors of rates across different states. I think those are the industries which are today gaining momentum in terms of the growth trajectory. I think it's a huge, huge positive impact. Coming to the revenue, I think we have all seen the transformation. Unlike other countries, I think when we introduced the GST, it's the first of its kind of its very vast nature and also depending upon the type of economic progress in different states. For example, states like Karnataka, Maharashtra, Tamil Nadu, Gujarat had very advanced VAT administrations. If you look at states like Bihar, if you look at states like UP, if you look at states like northeastern states, there were hardly any VAT revenue in that sense because they were not producing states. The revenue consideration is to be the major concern for the states when they walked into this path of what Bala today rightly said about the pooled sovereignty. It took years of political negotiation for the governments to come together and agree that in the interest of the economic advancement, we need to really forego some of our sovereign powers and walk the common path. I think the revenue gain from 80 and odd thousand crores, what I would say that I think 2017-18 July is the 17-18 is a truncated year because it was only 9 months what we accounted the revenue. 19-20 to 25-26 when we look at it, somewhere from 90,000 crores to today we are looking at about 185,000 crores average collection without any increase in rate of taxes except for online gaming. I think it's purely on account of the economic efficiency of the tax collection. If you are looking at a 1 plus CAGR in a continuous manner, I think it clearly talks about the revenue buoyancy on account of the efficiency gains. Again, the government is a big winner. The third objective of looking at how do we price the products in a competitive manner, you are seeing the consistent efforts of the government. I think in spite of the growth in revenue, the demand from the states because of the developmental needs and also some of those states not so prudent in their financial spending, but in spite of that, every government has to really look at revenue as a main source. But that has not deterred from taking bold decisions by the government. I think some of the decisions taken by the government could have a huge hit in terms of the revenue, what Bala mentioned about in the morning. But I think the competitiveness of the goods and services, making it available. I think we are not talking about the essentials or the need-based commodities and goods. Today, government is talking about aspirational middle class consuming and higher value goods for the purpose of their standard of living increase. I think from all the three perspectives, Venkia, I will say that I think it has been a great amount of achievement in terms of the basic objectives. 8 years is too short a period to really evaluate a transformational tax reform like this in a country like ours. But what we have achieved is no less achievement. There are a lot more to be covered, but I would say if the jury has to be out today, I think GST has been one of the very foundational structural reforms in the country next to IBC laws in making the business more efficient and taking our economy to the next level.
Yeah. Wonderful, sir. In fact, Bala gave, as you rightly said, the three structures, and you elevated it by giving a complete background to it. In fact, in that same breath, sir, question to Shivdas, sir, in fact, as a legal person, sir, the jurisprudence, right, that over the last 8 years, has it aligned itself with the first principles of GST? What's your view on that, sir?
See, if you look at judicial or rather jurisprudence in respect of issues in GST, you have not had many decisions of the courts coming out on the core principles of GST. There are, I would say, a couple of reasons for it. One is we leave the decision-making process to today in terms of jurisprudence to the authorities and the advanced ruling authorities. You don't have the GST functioning. So, in that sense, you don't have a laying down of principles on the GST law. The few decisions that have come from the high courts. Now, there are very few high courts that are able to decide substantial issues on GST. The reason being that, as I keep seeing, about 70% of the litigation today in GST in the high courts are, in my opinion, completely unnecessary litigation. You have orders being passed without granting hearing, without considering documents, or saying that these documents were not considered, were not given initially, therefore I will not consider it again. Or I would say refusing to look at circulars issued by the government in the proper perspective. So all these have added to the clogging of litigation in the courts. So very few decisions are coming out of the courts on substantial issues on law, especially on GST law. Very few are there, for example, on the issue of intermediary. We have had almost every high court pronouncing its judgment on intermediary, and a uniform principle is adopted by all the high courts on intermediary. Now, similarly, on the availability of input tax credit, to what extent the assessees can be held responsible for a failure of their suppliers to comply with the law. So these are all issues that are slowly coming up, not many decisions of the courts on this. So I would say that the jurisprudence has not so much evolved in GST. Maybe we can expect it to happen in the next few years, because you will have a tribunal like the GST pronouncing its decision, and thereafter the validity of it would be tested by the high courts. So that is how you will have the jurisprudence being laid down. Till that time, it's a question of testing the authorities' views or the advanced ruling authorities' views before the courts. The courts normally proceed on the basis that the authorities do not appreciate the law in the proper perspective. That's how they start off. And they are not to be blamed for it. Because if you look at the orders being passed, that is how orders are getting passed. So, jurisprudence not getting evolved in GST so much as of today. Next few years, we'll see it happening in the courts.
Got it, sir. We should be geared up. Is the message I take. In fact, to PVS, sir, we heard Mr. DPN sir talking about the collections increasing from what it started to what it is today in terms of 2 lakh crores. In fact, that is also supported by the number of registrations we have, right? Which we started with 65 lakhs, 70 lakhs to it is crossing 1.5 crores of registration now, sir. So do you think that the GST has incentivized business towards formalization, sir? Is there an underlying concern that still business has to come into the formalization net?
Obviously, working? Obviously, there is we have to look at the GDP of India is about $4 trillion. Take it as an approximate number. We may be slightly short of it. $4 trillion, in the initial talk, you said that 15% was the average rate of tax.
Correct.
Take it that. So technically, if the entire GDP were taxed at 15%, then you must have a revenue which is almost 50 lakh crores. That is not the revenue. And government also may not be able to realize that revenue because when you deal with agriculture produce, the consumption of the masses, which are, all those will have to be exempted or zero rated. Something has to be done so that the poor are not taxed. As far as indirect tax is concerned, it's a tax on the consumer and therefore it's a tax on the poor also. So to that extent, the government will be concerned. So 24 lakh thousand crores is, I think, a phenomenal achievement. So I will say it is not there exactly to the potential, but almost there. But the concerns of GST being distorted will be fake invoices, people not coming into the fragmentation of small businesses. So brothers having one shop but having two registrations. All those things will be happening because there is no compliance process is still not easy. Every taxpayer, every registration has to interact with the portal at least 3 times. And this is not going to be easy for a business to do. I would like to have a single interaction rather than multiple interaction. And of course, the quarterly compliances instead of monthly compliances, they are all making it a little more easier. But still, it's tough. So I would think, and another one is that if the rates are high, the arbitrage which is available for evasion is more, and therefore more people will tend to be outside the net also. With the rate reduction to 5% for most common goods, there is the arbitrage comes down. The cost of compliance is better than cost of evasion. So you will find that the compliance will increase. So the registration numbers will go up far higher from now on. In fact, I would be very happy if the registration process is only for identifying a taxpayer. It is not a license to do business. It is only an identity. If the identity is the only job, why have 2 segmentation, something simple, something complex, and other things? Everything should be simple. And that's the basis on which the registration should be granted. Today, registration itself is a struggle. Nobody wants to go through the process of registration because it not only involves producing documents, in some places involves much more. I don't want to specify what is that much more. So that is the difficulty today, I'm saying. So it is not desirable at a policy level, very well made. At an implementation, a lot to be done. So between the policy and the implementation, if the gap can be bridged, though it is electronically administered, I will still say, I will not give, if I have to say I'm wholly satisfied, I'll say I'm not. Whether I'm substantially satisfied, yes, I will say I'm substantially. Yeah.
You reflected our mind, sir. I can tell you that much. So, sir, I'll start with you, PVS. On this we'll come to 2.0, right? I think what was very clear from what we saw and what we read and what we heard today is that it's for promoting trade and increasing the consumption. Of course, that is going to come with the rate reduction and also with compensations, as we heard Bala talking about it, ITC disallowance and all those stuff, right? So, what are your thoughts? Industry has to now get that into a reality and then face all of that in their P&L and all of that in their day-to-day business. So what would be your advice to the industry in terms of this transition to 2.0?
Number one, see, as an industry, there are many, a rate reduction causes certain unique difficulties. It is, while it's welcome, it looks, politically it's a perfect game. They are passing on to the consumers are the beneficiaries, all well done. I have no problem. In fact, if this has been done in 2017 itself, it would have been far better. In fact, it's 8 years delayed in a way, but I'm not accusing anybody because everything has a maturity curve. Nothing is achieved overnight. But some of them could have been done even in 2017. A rate reduction causes distorted duty structure. So inverted duty structure means almost you'll find, my own sense is, the number of refund seekers will be suchly unprecedented. When I say unprecedented means far beyond what the government thinks it will be. If they are sized, say, 100, I wouldn't be surprised if 150 land up for some kind of a refund claim. whether the machinery is geared to grant 90% grant on a risk-rated measure. We all know if there's a measure as to why you are entitled to refund, there will be frustration of that measure also in administration. So we have to face those frustrations also. If you are otherwise qualified, you will be made to disqualify. So that kind of a pressure will come at some point in time. So I don't think this 90% is a practical call. I would say mandatory refund and with the ability to catch up. If you want, you can audit, you can recover it at a later point in time. Mandatory refund based on risk parameters, that risk parameters can be distorted. So I would as well live with a regime where there's a mandatory refund within a time frame rather than waiting 90% based on risk qualified. That would have a better regime. So that is one. Number two, there is a accumulated credit. I may be still 5%, but I have got accumulated credit. Auditors are not going to allow you to sit with accumulated credit as saying it's a good asset. They would like to see the realization of that asset in a reasonable way. Otherwise, they may call for a provision. Suddenly, you may take a hit in the P&L account. And therefore, because they feel it's no more a good asset, in numerous way, it's a good asset because law allows you to carry it. Doesn't mean it's realizable. So you'll find certain pressures from the auditors for provisioning and other things. So you have to give a supply chain. You did mention one particular thing. I liked it. When you say see whether contract labor can be substituted with your own labor or your employment. Essentially, don't have an input structure. Therefore, you can avoid an input structure. Your ability to absorb accumulated credits go up. That's one way of looking at it. So that's one suggestion which people can look at it. But it's not easy. These are all simple solutions as a taxman. The industries look at it differently. Then one third one is that there is a write-off which is going to happen because of accumulated credit lapsing for exempt industries. One may say you wanted exemption, you have to face the consequence of it. Assuming that I give you a very fine situation. I am a taxpayer. I have not been diligent in availing my ITC. I have used cash to pay my output tax. Now suddenly I have to find that I have to write off. Another person used the ITC to pay the taxes. No, he is better off than a person who has paid cash tax. Two people who have discharged the tax, one availing ITC and the other not availing ITC and paying cash tax. They are not placed equal. They have been one has been disadvantaged and the other has been advantaged. That kind of a distortion has taken place in this. So I would like, while government may not bail out this because its intent is that you will write off and pass on. Those are very isolated cases also. I'm very sure a study has gone into it before they are announced it. It's not without data the government has announced these policies. They would have complete data on there. These are the decisions. So I will see the industry which are inverted duty structure will be worried, and those who are zero rated will be much more worried. Actually, 5 was never 5. 5 will be always 8 or 9 because of the 17.5 issues, inability to avail credits and so on. So likewise, 18 was never 18. 18 was more than 18 in all cases. So in fact, the third reform which you say, GST 3, which you raised, will be about releasing 17.5 and make the rate higher. Because the effective rate, what the consumer feels will be the same at that point.
Absolutely, sir. In fact, very, very valid points. I think it is important that we have a complete perspective of what you said, sir, so that the implementation can be done with all the things in mind. In fact, my next question on the same subject is with Shivdas, sir. Sir, 1.0, if I can call that as GST 1.0, the litigations were on ITC, the registrations, multiple SCNs, and also on the transitional credits, right? I think 2.0 has enough and more, if I have to kind of make a guess based on what we have heard in terms of compensation says, ITC disallowances, your intermediary, what will happen to the past and all those stuff. So how do you see 2.0 for the industry, sir?
You see, I would put it this way, in fact, taking off from where PVS said. As far as industries are concerned, the exemption or the reduced rate of tax has to be balanced with the credits of the inputs available with them. That's going to be a big challenge. I am not sure how many of you would have seen that town hall which the finance minister had. somebody from Calcutta had raised this issue. A paper industry now typically will have the rate of tax as 5%. But as all his inputs are at the rate of 18%. Now what happens to the 13%? Right. Now you expect an industry to pass on the benefit or collect a tax only at 5%. No difficulty. Now this 13% if he has to collect, he has to increase this price of the final product, not from 5%, make it as 7 or 8%. Only then a portion of the input tax credit has to be collected. After all, he has paid for it. Nobody will pay for something which is not relatable to your business. No, that's going to be a challenge. And if you are going to ask them to demonstrate, because I don't know how many of you would have seen, there is a letter issued by the government to the field formation saying that please look at how the reduced rate of tax is alone being collected. They have identified a lot of commodities where they will look at. So essentially, they will do what they are supposed to do through an anti-profiteering measure. Though as of today, that provision is not there. But they will try to implement it. And they are rightly so in asking people to implement it, because at the end of the day, it is the government's promise to the consumer that they will collect only 5% on that product. Now, if the business has to accommodate the remaining 13%, how will they do it? Now, if that has to be done, then if 13% should be borne by the business, then this 5% reduction is not favorable to the business, unless you give them a leeway to collect at least a portion of it as part of your final price. That is one. Or you should have a situation where you have a method of reimbursing to the business this 13%. After all, when you talk about an inverted duty structure as 13% being more, etc., and you're talking about an accumulated credit as an inverted duty structure. It's not a question of inverted duty structure on the further inputs which you are going to purchase, which you are going to use. That is where typically an inverted duty structure will apply. This is an accumulated inverted duty structure. So how will you give that to the customer? Give that to the manufacturer? Will you give it to him in terms of a cash refund? Or will you allow him to use it for payment of some other tax? Because there were some news reports floating saying that they are thinking of, to what extent it's right, I am not sure, that they are thinking of allowing you to use this credit for payment of, for example, a state GST. Don't use it for central GST, but use it for state GST. Or you can use it for payment of customs duties. I mean, those are all things which is being talked about. Unless this happens, then the benefit to an industry doesn't come so much as is expected. One. Now, the moment this doesn't come, industries will always look at ways of compensating themselves of this excess credit. Either they will increase the price, retain the tax invoice will show that the price is increased, but the rate of tax will be collected at 5%. So if you look at a customer, customer will have an invoice that says only 5%. But is the price the same? The price is increased. If the price has increased, net of price, you collect the tax separately. So what happens to the net of price? Is it increased? Now if the department goes around to say that you have increased your price, that's a possible litigation that we are going to see in 2.0. One. Then all other cases where the credits are being blocked. In fact, DPN sir knows me very well. I'm dead against this 17.5 provision at all. It's an absolutely ridiculous provision to have in the law. At the end of the day, anybody pays for something which he will use for business. No industry is going to buy something which is not meant for business. You restrict it what is used for personal consumption. That is something different. But then to keep restricting it in terms of immovable property or works contract, etc., doesn't serve the purpose. It doesn't augur well for a destination-based tax or a removal of cascading effect. Doesn't serve any purpose at all. So the earlier they do, they should not wait for GST 3.0 to remove 17.5. I would say it should be GST 2.25 to remove 3.17.5. Straight away they should remove it. You will see a lot of compliance taking place, a lot of business taking, a lot of the I would say payment of tax much easier. Give all credits of all taxes paid by a person. That should be the fundamental thing. Whoever uses it for your business, if he has paid for it, give him the credit. Whether it is, for example, you see that cess is not being given, compensation cess is not being given. You have certain litigation saying that compensation cess should not be given for exports also. High courts have to intervene saying that what joke is this? These are all avoidable litigations in GST. So give them the complete input credit, inputs or input services, ensure that they use it for their business, leave it to them to demonstrate it is used for business and give them the credit. And then the remaining will become their output liability. If the moment you start restricting the credits, then every business will start thinking, how do I encash the credit which I have paid for? How do I do it? So that is going to be the bigger challenge in 2.0.
Wonderful, sir. Thank you. In fact, I'll take your point to DPN, sir. Sir, on this anti-profiting, I think we heard Bala loud and clear. I'm still having some guts to ask you that question, sir. But taking a cue to what DPN sir said, Shivdas sir said on the notices or the letters that are being circulated in terms of collecting the data, right? Of course, all of us are clear that the law is not there today and there is no way to enforce it or anything like that. Of course, they trust the industry to pass on the benefit. As to what that benefit has to be, I think that is where everybody is circling around to say that is there a possible litigation that can come in the future. Do you think that the MRP laws are good enough, but do you think the government may come with some measures towards that to see what is the benefit passed on and is it good enough benefit passed on? Of course, sir, if the consumption is going to increase, I think all of us will be happy. If a situation arises where the consumption did not increase as much as it was expected, do you think any countermeasure can come in, sir? I think that's my question.
I think right from the 3rd of September, I think this discussion has actually gained a lot of momentum. What basically I think the government is looking at is, I think GST 2.0 did not happen overnight. If you look at really the Indian GST, we need to look at the dynamics of the participating constituents of this journey. It's not only the central government, it's also all the states and all the union territories coming together and agreeing to something. I think when we look at the rate reduction, probably the consensus has arrived in the GST Council, you heard it from Mr. Bala in the morning, that everybody is aligned that the rate of taxes, the incidence of tax on consumption should come down in a country like us if we are really aspiring to grow fast. I think that consensus is what driven to rate reduction. Otherwise, none of the states would have agreed to this because the dependency on GST revenue for the state finances is much higher than what the union finances are. But I think everybody is aligned that the rate incidence of tax on indirect tax like GST should come down. That has driven this decision. Legitimately, the government, the constituent members of the GST Council also expect that if we are all agreeing with a certain amount of consternation, I would say that because they are foregoing some revenue, at least that benefit should reach to the common man for whom we have all agreed to, notwithstanding that we are going to be impacted adversely. I think that's where the challenge for the government will be, not only to announce it, but make the walk the talk. I think we must also look at this point of view that the anti-profiting measures were pressed by some states during the deliberations to say, I think, how do we believe that it will happen? But I think the better sense prevailed in the council to say that I think a trust-based approach is more desirable than go for a policing model. The government is very conscious that they don't want to press the anti-profiteering provisions in the original sense because we are all talking from our experience of 17, 18, 19 when anti-profiting provisions were made. It served a particular purpose because I was a part of the drafting committee. Let me tell you, 2010, the CNDG came with a report saying that the VAT implementation happened from 2004 to 2008. There has been a widespread reduction in rate of taxes and also the consequential full-fledged input tax credit accruing to the value-added taxes in terms of the benefits of input tax credit, which was not available in the erstwhile sales tax regime, which was working on a set-off mechanism. How much of that impacted in terms of the final prices? And the CNDG, when they came out with the report, said that had we had a provision like an anti-profiteering, perhaps we could have managed the transition of the erstwhile sales tax to VAT in a more efficient manner to the benefit of the consumers, because indirect taxes perceived to be the ultimate burden of the consumers. We looked at it and we made the provisions. There have been a lot of litigation like what Mr. Shivdas has mentioned. It was left opaque. There was no detailed procedure was laid down. It was challenged. And you know that the Delhi High Court still upheld the provisions because it's ultimately in the interest of the consumer. While we all assembled here, we will speak for the government and for the business. There's somebody for whom we exist, both of us, is for the ultimate consumers. So having said that, I think what basically government's expectation is, there is a rate reduction. There are somewhere, I think if you look at insurance, for example, it was 18% on top line. Today it is brought down to 0%. The visible high incidence of input like a co-insurance has been exempted. But there are commissions, there are margins. The whole insurance sector also depends upon a lot of input services which are external. If government start exempting everything, it would not get the revenue where they are looking at, in spite of all these detailed discussions. So somewhere I think government is conscious of the fact that the transition from a higher rate tax to the lower rate would have incidental implications in terms of the business absorbing some of those input credit incidences, and how do one look at it. Probably the cost structures are something which every company will have to look into. Today when we are talking about, there are challenges like transitional challenges. Transitional challenges, quite often I think you see, not necessarily an MRP in everywhere. MRP and anti-profiting are two parallels. MRP applies to only certain commodities under LMA, otherwise it's generally non-LMA commodities. The anti-profiting will have its own impact. On MRP, I think we have seen the FAQs. I think so long as the MRP is inclusive of taxes, the government looks at the transitional stocks wherever within your control, you can re-sticker it. Beyond that, the government has made it more or less clear that we will not insist upon a re-stickering beyond your controlled inventory. What could be the price points, what could be the coinage issues, what could be the grammage, government is very open. I think there is no clear-cut restrictive clarification given by the government. And there is so much of conversation is happening with the government, not only from the tax, but also from the regulatory spheres. So we will look at anti-profiting this time with a little more softer touch is what the government is looking at. But the fact what Mr. Shivdas has flagged is real, that in a purely value-added tax system, you have to relieve the input tax credit if you have to do the output tax in a more efficient manner so that the business doesn't absorb any cost. But it is easily said than done. For example, you look at the provisions what we have brought in. I'll just get a background because all of you will understand exactly. I'm speaking both from the government point of view and also from the business point of view, because now that I've worked outside the government for 3 years and day in and day out I interact with persons like Pramod, hearing him from his perspective as to how it is impacting the tax policy on the businesses and the consumers. One of the things what we brought was instances like reverse charge. Reverse charge was basically brought in for the purpose of where a provider is outside India and the recipient is in India. And it is on a B2B. We never brought in IDAR before 2015. So it was basically creditable to the extent possible, and it should be business neutral to the recipient. Now, in the GST, we have brought in not only the reverse charge and import, but we have also brought a lot of provisions of a domestic reverse charge. Domestic reverse charge was looked upon as an anti-avoidance measure, manpower recruitment supply and things like that. Now there is time now to look at how best we can allow some of those mitigating solutions. Can we do a domestic reverse charge through a credit mechanism? Is it possible? I think we should look at it. We have also seen the ISD provisions getting little more regimented, but you look at the way in which the cross-charge issues were getting catapulted into a big controversy on a deemed supply. I think somewhere the government is looking at that from a point of view. Where there's a lapsed credit, there is a revenue to the government. But inverted duty structure is going to be an increasing pain point with steep reduction of 13 percentage points from 18 to 5. It's something which is collateral because of the rate reduction. And we also heard Mr. Bala mentioning about it. There are revenue considerations. Government is aware at an opportune time, the government will come forward with a solution. I think he has been more than fair in openly saying that The government is aware of it, government is taking note of it, but when it will implement it will depend upon the revenue considerations. We need to work as a business to look at how best I can look at it. PV has mentioned about the 90% provisional refund. While looks good, sounds good, is it going to really be happening thing in a country like us where there is a central tax, where there is a state tax? Is it going to really happen? I think we need to look at something. We looked at e-invoicing, we looked at IMS, we are looking at now a risk-based intervention. The risk-based intervention at least will bring an objective criteria. If not, it will eliminate completely the discretion. There is somewhere, I think it will bring some amount of transparency in the tax administration function. We will give a reasonable time to see exactly the 90% refund actually coming to the credit of the taxpayers' ledgers. While on zero rating, on export, I think Mr. Shivdas and PVS both will agree with me. What are the type of pain points we had in service tax with regard to refunds? It was administered by the center. We had a cross-border provisions from 2006 onwards. We had export provision from 2004. We did not get the refund even 2016 with regard to service exports, and some of those rejected are being argued in SISTAT even after 10 years, 15 years. The taxpayers did not get the refund. Today, if they have to be given a refund with interest, the government will be spending 3 times, 4 times of what exactly it ought to have paid in 2006-07. Things have improved a lot in terms of service tax refunds. Now, the time has come. How do we look at when we have made substantial progress, but for the intermediary, I don't think on export refunds we had major pain points. IDS is going to be an evolving refund mechanism. It was never there in VAT, it was never there in service tax or excise. We have invented in GST. It had met with partially the expectations of the taxpayer. IDS refund is restricted only to the inputs and not to input services, and outputs and not in output services. Post Supreme Court, we have brought in input services in proportion to that, but not the opening balance of the input service. But now is the time we need to look at it. 54.3 requires an amendment. Inversion can happen on account of higher input services to a lower output, or higher input with a lower output service. It can happen on both ways. How do we bring in those changes over a period of time will really mark. And I will always have a positive thinking about the GST Council functioning. If you look at the post-supply discount, an issue which was decided in Maya Appliances way back in 2019, today the government has come out with a categorical admittance in the law that I will not insist upon a one-to-one correlation. I will not insist upon a reversal of the credit upon the recipient. I will still give you the benefit of a reduction in output tax liability post-filing your return based on your commercial documentation. What it made the change, it's the technology which has at the back end gives the comfort to the government that every recipient has reversed the credit is a precursor for a subsequent output tax liability reduced by the supplier in the supplier-recipient ecosystem. Everywhere the improvements are happening, it may be incremental, but I'm one person, I think continuous engagement with policymakers. The last sentence what Bala said, I think should resonate with everybody in this hall, that here is a government willing to listen, but the government has its own constraint because it has to not only convince itself, it has to convince everybody. He also mentioned about petroleum products. He said center may have a willingness to assume that it can be brought before an agenda with the state government. But had that agenda been brought, even this 2.0 would not have happened. So there is somewhere in the journey, I think there is an understanding, appreciation. IDS refunds would definitely be requiring an attention. I think industry should have an enhanced engagement. Look at suboptimal solutions. While it's ideal that everything should be returned to me, can I look at how do I mitigate? One, domestic reverse charge, can I start? CGST to CGST, can I transfer? Can I look at later on a group company, the reverse charge can be just an accounting entry rather than a cash payment? 4, I look at a return-based refunds like what VAT regime said in the beginning. Can I go to that area? I think we need to continuously engage and press this. And the restrictive provision like IDS I will not give on particular sectors like essential oils. Maybe I will not give it in a chewing tobacco. Government will have to be more restrictive in putting that brakes and give this relief to the business going forward is my take. But I'm hearing that the IDS refund needs to be addressed. A lot of operational administrative challenges are there. We will come to that later part of it. I'm at a structural and a design level. The government intentions are very clear that IDS refund need to be looked upon from a point of view that it is purely driven by the business neutral principle insofar as the value-added tax is concerned. I would say that.
Wonderful. So I think you have given us next 6 months assignment in terms of what all representations we have to do. So in fact, I'll just add one of the PVS's answer as a question to you. PVS was mentioning about why not have a little higher rate, right? And then absorb both the ineligible as well as, in a way, the cess and the input tax credit that is not available, so that it becomes much more competitive and they can price it better. Is that not a thought that is generally discussed, or how do you see from a government perspective if resonating that thought with them, sir?
I think this is exactly what was discussed in the last 2 years, if I may say so. It was the Rate Rationalization Committee was constituted somewhere in 2021. The options before the government when we are talking about collapsing of the rate was also to standardize somewhere a rate which is more or less giving the current rate of revenue and also look at the future harnessing of the revenue. 18% could have been brought down to 15% and somewhere a 5% could have gone to 7% and 12% could have been still abolished is one view to be taken. This alternative view is to say that keep it 18 as a standard rate, keep 5% and some of them which you don't want to tax it, give it at a 0 rating or a nil rate. Now, how the revenue can be done as a tax function, which Bala has kept on telling about repeatedly in the morning session. Government could have come with permutation and combination, and what business legitimately expect is, why do you subject me to a dispute in putting 17.5 restriction? We are reliving the same period of catering services, rent-a-cab, we talk about worst contract service. When I'm completely taxing the end-to-end supplies, even in terms of immoral structure, when I'm doing it on a leasing or renting, I'm paying GST, why this block credits, etc. I think time has come now. 17.5 was not there in the VAT laws. When we brought law together in the GST, I think PVS and all were part of that deliberation with us when we are preparing this draft law. I think I still remember when I used to have a workshop with BCIC in the time of draft law when we was doing it. A lot of provisions we grandfathered from a previous law because we were not comfortable as to what we are going into a new tax regime like a GST. 17.5 was one of those things. Net tax liability, gross tax liability, we lived through for about 3-4 GST council, ultimately brought it. Now, some of the things which we are correcting in rate, I think which could have been done, as PVS rightly said, about 8 years. Why did you live through this pain point? It was just an apprehension that the revenue will fall. It's only after 8 years and post-GST, post-COVID, we have done 4 years. The revenue buoyancy, we know that we can manage this rate reduction. The government is more confident. Probably, looking back, I think the key reform which will be there in the government in future will be how to streamline the ITC. ITC block credit is a distortion to VAT. Everybody is aware of that. Probably, I think we can start with some of those non-revenue items like, see, we have brought in a distortion even after 5 years of GST, like a CSR spend, I will put it in 17.5. At another law which mandates you to spend that spending with the GST implication, you are not in a position to take credit. Rent-a-cab, catering, all those things should really be going out from 17.5. Worst contract is a huge item. Worst contract, you know the way in which it went into a litigation. I think better arguments were made by Ms. Shivdas, type of a senior person, to have told the court in a way in which it ought to have been argued. I'm not blaming anybody. It's the substance over the form. Ultimately, what happened in that safari was it's basically a form and not the substance part of it. That's very unfortunate. But once it is said, it is said. It's time now we need to look at exactly how we look at some of those block credits and take it away. Rate increase may not be in the government thinking. Having done this rate reduction, you will see the appetite to do further reforms in rate reduction will be very less. Increasing the tax will not be politically optive.
Got it.
But I think the distortion which has been created in ITC, I think we need to really work on this. Inverted duty structure, a lot more will depend upon the shoulders of senior advocates like Ms. Shivdas, because we have a Guwahati High Court has given some way, a pathway to look at inverted duty structure. today we are looking at inverted duty structure from a very restrictive point, from a manufacturer to a trader. Supply is beyond manufacturer, supply is beyond trade. I think we need to really look at inverted duty structure means from an input supply to an output supply. If my output supply is at a lower rate, is it a same HSN? Is it going to be a same time or matters of detailed interpretation? But the law has not said so in clear-cut terms. I look forward, I think, somewhere a proactive engagement with the judiciary. And judiciary comes with very distilled principle to say what is an inversion in a value-added tax. I think we look at that principles, and maybe probably with some court rulings coming, even the GST Council will be strengthened their hands in coming out with some sort of suggestions and solutions that it should be a complete pass-through rather than hold back because of revenue considerations. I look forward you taking up that case before the courts and take it up exactly how this inversion need to be defined.
Wonderful, sir. Wonderful. In fact, sir, on the rate, and I have one question to PVS. Having seen the international arena on this VAT GST, right? Around 175 countries has this VAT GST, and most of them have a standard rate, right? In fact, European countries, if you see 19 to 21%, or even in Asian countries, I don't think a lot of countries has this multiple rates. When it was introduced, I think it was to make sure that the transition is smooth so that there is a larger acceptability, sir. Do you see that multiple rates still relevant even after 8 years, or at what point of time probably we will have to merge into a single rate?
Single rate in the Indian context is very unlikely. Our population spread, those who are striving to live every day with minimum essentials and those who can afford, I think that distortion is too large. I don't think even by 2047 you will be able to have a single rate in India, even though you will see a Viksit Bharat by then, but single rate may not be seen that time also, because that's a very great distortion. Indirect tax is a tax on the consumption. Everybody is a consumer, even a beggar is a consumer because he also consumes something which is taxed. So to that extent, we have to be very conscious. This is a politically sensitive. Sir did mention the political compulsions. The rate is an external visible feature. So if you can have 7% and full input tax, the price may not be affected in the market, but the consumer sees it as 7% and not 5%. So it's a sensitive matter. Even today, healthcare industry would have been very better off by having an output tax of 7% and availing input tax credit. It would have been still neutral to the patients, but still the government will never impose a GST on healthcare, because that is supposed to be hitting the political constituency. Likewise, 5% is a better rate for the government to put it, because that's a politically sensitive constituency. So I think we are not too bad. 5, 18 is not bad. Maybe 18 can come down to 15, 15 can come down to 12. That kind of a reduction may be possible. 5 coming down to 0 is not a good idea. Actually, 0 is not a good idea at all. You must always have some rate to bring everybody within the compliance regime. To put everything in 0 is like and even 5 without ITC, 18 without ITC is a single point tax. You should go away from single point tax and remove those distractions actually.
Sir, in fact, on the same topic, sir, I don't want to leave Shivdas sir without asking that question, but with a small amount of, with an additional question there, sir. We have seen service tax, we have seen sales tax, right, which predominantly had a single rate, right? And in fact, a lot of this classification issues or the inverted duty structure is on account of multiple rates, sir. What's your thought on single rate versus multiple rates?
No, as PVS said, not to have 0 in respect of certain commodities is just not possible, because it's always the optics for the government that counts. So that's not possible. But if you are going to have 2 rates, maybe 5 and 18, or whatever be the 2 rates combination they want to have, they can have. But the general acceptance of these rates would depend upon the availability of all credits to the business. Essentially, it will revolve only around that. The moment you have these credits available, and then the tax being paid in terms of 5 or 18, don't have this bifurcation of 5 with ITC, 5 without ITC, 18 with ITC, 18 without ITC. That creates hell lot of incongruencies. Should never have that. One rate, entire ITC available. How you have an extra input credit available? Do you give it back to the business, or do you ask the business to absorb it? This is how the whole thing should match. Two, the moment you have fewer rates, 5 or 18, most number of disputes would come down. Most number of disputes. But there could be some, I would say, incentive for the, at least for the state administrations. I would not keep it at a center, because the general experience which the industry has today in the 8 years of implementation is they are better off, they were better off when they were administered by the central government. They are not so better off when they are under the jurisdiction of the state government. That's a fact. I don't know whether we have any state government officials sitting here, but that's a fact. The understanding of business, of the business agreements, of the technology used, of the type of businesses we have, of the type of agreements we have, is extremely poor in state as compared to the center. So therefore, there will always be an incentive, if you are under the jurisdiction of the state, to raise classification disputes. You see the pattern of classification that has happened today. Most of the products that fall in a particular sector have gone to a particular rate. So to that extent, say for example, seats of a motor vehicle, they will go under motor vehicle, or they will go under parts of general use. Those types of disputes will not come post 2.0. But if there are disputes between a commodity that can come under, for example, a general purpose of a rubber as compared to a specialized item that is used in a particular industry, then the difference in the rates is huge, between 5 and 18. So there will always be an incentive for the state to raise, when I say state, I am saying the government as a whole, to raise a dispute of classification of a particular product, because it becomes 3 times the duty that you are paying. So that sort of disputes can still come. But generally, after this rationalization, classification disputes can definitely come down in GST 2.0. There's no dispute about it. General other disputes can be there. For example, your ISD can still continue, cross-charge can still continue. So all those disputes will continue, irrespective of whether they see, I am always surprised. The number of circulars that have been issued in GST clarifying the position is extremely good. Extremely good. From what I have seen in the pre-GST regime and what I have seen post-GST regime, you talk any circular you take a 78 circular and a 199 circular or a 210 circular or a web hosting circular they issued on intermediary or the recent post-discount circulars, extremely good circulars. But the difficulty is the circulars stop at the issuing level. The circulars do not get implemented at the implementation level, especially when you are with the state government. They do not care about the intention behind the circulars. That is where the difficulty is. Now, it's very difficult for at a policy level to ensure implementation of it. After all, at the end of the day, it's a quasi-judicial function. If you don't want to you don't want to adhere to a circular, there are courts to correct it. But if that will always keep having the litigation on, which is what is sought to be avoided by these circulars, which doesn't happen. That is the only, I would say, the discordant feature in this whole thing.
In fact, now we know.
I may sound slightly harsh, but that is what it is. 8 years of litigation in GST is what has led us to this.
Venki, you will see a market change. One shirt, 2 shirts for 3,000 rupees will never be sold in the market now. Because it crosses 2,500 rupees. The day rate is different. So they will now sell it one shirt with whatever GST is.
We'll have a lot of innovative products coming in. So in fact, now we know where the rate rationalization, having heard all three of you now know where the rate rationalization for 3.0 is going to come from, sir. I think we are near one, but I will take one question with each one of you, sir. First to DPN, sir. You being here, we don't want to leave you without GST question, sir. In fact, 2024 statistics, if I'm not wrong, said that there are close to 15,000 cases which are going to be, it's now much more with a lot of issues now where the orders have been passed, sir. What do you think that the industry should be geared up? In fact, Bala highlighted the circular which, the notification which came in yesterday which gave some clarity. For the efficient use of the judiciary, sir, what would be your suggestion in terms of how the cases before the GST should be handled, and what would be your advice to the industry?
Have DPN, sir, in all the 32 benches.
I think at a very, very, very humble level, I must say that I think to bring in a structure like GSTAT in a multi-state context is not a mean achievement. I think the government worked very hard. There were challenges, obviously the challenges with regard to the jurisdiction, with regard to the qualifications, etc., etc. What government has ultimately come as a one uniform structure. The GSTAT is having its principal bench in Delhi, but as on today, 31 benches, we'll have another 28 benches, we'll have 60 benches across. The ultimate master of the roster is going to be the president. I think we are unifying in the dispute resolution a vertical which will not suffer from the type of things what we have seen in the state and the center sitting together. There is no overarching person. We have seen the advanced ruling. I was a part of the IIIR. But it's always, I think, when two are sitting on equal footing, actually having one single line of command becomes very difficult. The single structure of unified structure of a GSTAT is the greatest achievement what we are looking at. Now, how does this will fan out in future will largely depend upon how the tribunal functioning will be there with regard to the expectation from the taxpayer. When we talk about the cases which has gone before the tribunal today, all of them pertain to the period 17, 18, 18, 19, 19, 20, to some extent post-COVID in case of few audits, etc. Where primarily the issues were unsettled either in terms of lack of clarity or most of them relating to the initial period of the glitches in automation, etc. Notwithstanding whatever the government has come with the workarounds like issue of a circular to say or certification, etc., the officers chose to not to look at it exactly when it came to the question of revenue. So lot of those issues which are cutting across the states, cutting across the benches, will have some flavor which is of very similar, identical nature. Well, everything cannot be handled by the principal bench while we all will desire, but let us keep it in mind very clearly that it's a federal structure. Each state bench will have a vice president with equal number of judicial members and technical members. We must respect that institution that each bench is as competent as the principal bench to decide the matters, but for the subject matters which are clearly assigned to the principal bench, we need to really look at in each bench how do the taxpayers and the stakeholders, including the legal fraternity, need to look at and try to bring before bunch of cases and try to bring it for a disposal within a well-argued manner. I'll just take an instance of Rule 9610. 9610 was contemplated and it was prospectively deleted. Now retrospectively it created a lot of litigation. You see how all those cases are brought together and disposed of in a single application, not by a non-speaking order, but well-reasoned, well-argued and well-articulated. It finds reasons and resonates well if somebody takes it in challenge, whether the taxpayer or the government. I think the higher appellate forum will be in a position to understand the rationale and the reasoning behind arriving at that conclusions. So many of those issues pertaining to the period which will be now coming before the tribunal are those. Either there is a subsequent clarification in the form of a GST Council circular, at least council circulars are binding on the departmental officers. We have a Supreme Court decision which says that the circulars are binding on the tax administration but not on taxpayers. The taxpayers can even challenge the GST Council circulars, but a government cannot challenge the GST circulars because that's Mohit Minerals too. Whatever recommendation of the GST Council is binding on the secondary legislation. Secondary legislation, somebody could say it's only rules, but I would say if the consultative process it goes through and the political scrutiny happens and the circular is issued after the GST Council circular, you should be given the same weightage and importance like the rule-making power. And as Mr. Shivdas said about that circulars, some of them are issued are of outstanding caliber. I just would call the data hosting services circular. Look at the depth with which the business models have been seen. Look at the way in which the policy makers have countered every field officer's perception. There was somebody who was talking about immovable property services, somebody who was talking about intermediary, somebody who was talking about performance. All the dimensions have been addressed and a solution has been given in such a manner, which I don't think the effort and time will be there in a court of law to get into that type of a law-making process. today the GST Council at the political level can vet and sanctify such a circular. That's one way of looking at it. If after all that effort, if some departmental officers say that I don't look at GST Council wisdom, I have my own wisdom, I'll decide, I think it's time we need to call out and say that these circulars are not respected, they should be administratively held accountable. That's very, very important. I'm seeing that going to come in future. If government can do so much of structural changes, challenges overcome, implementing through the official machinery is not going to be a big challenge. It's going to be driven a lot more. We have seen the SOP circular of DGGI, we have seen the circular instruction issued in NOS, we have seen some of them will come in the day. But that's one part of it. Now, coming back to how best the GSTAT can function efficiently, one, I said bunching of cases, similar cases, argue it out well and get a precedent set. I'm sure the coordinate benches seeing the reasons will agree to this, because in every bench there are going to be 2 judicial members sitting on this, and it's going to be seasoned officers from the tax administration as well as the judicial members. I find a coordinate bench will find value in a well-argued case coming on that. The second important thing we need to look at is the transparency what will bring in the GSTAT functioning. I think good that it's going to start with the technology-driven approach. Now we have all seen how today the GSTN is in a position to bring the visibility for not only the taxpayers but also the tax administrators. Now this brings automatically an accountability. If it is going to be numbered, it is going to be listed, it is going to be transparently, and MIS is getting generated on pending cases, parted cases. I think Mr. Shivdas can bail me out. I think even in CSTAT we don't have an inventory of the parted cases or the matters where it has been adjourned, how many times it's adjourned on the request of the departmental representative, how many times it is adjourned on the request of the council, and what is the compelling factors for not passing an order even after the matter is heard, when there are guidelines, things like that. Technology will bring certain amount of accountability in the functioning for everybody. It's basically for the practitioners before the bench as well as for the bench to be accountable for that. I think technology adoption is going to bring a little more change in the way the GSTAT functioning will happen. But the challenge will be, I think what I foresee in the GSTAT will be, each bench is independent to decide the matter and what it's coming. It's a fact-finding authority final. Now, most of the time, I think Mr. Shivdas and Mr. Previous will agree with me, half of the time the appreciation of the facts is a big problem. Not only at the adjudication level, even at a higher level. Fact can be only one, it cannot be 2 sets. If facts are correctly captured, facts are correctly addressed, I think half the problem can be addressed. I think we need to look at how best the benches respect each other's decision in terms of deciding a matter. Because this is going to be not so cohesive like CSTAT. CSTAT is, after all, it's administered by one governmental machinery. Though it's a quasi-judicial body, we all know that a lot more depends upon the unified structure. Whether the president of the GSTAT could bring in that type of an uniformity in a multi-state bench in terms of the cohesion and coordinated approach in resolving a problem, I think the pressure of the taxpayers going to a higher appellate forum like a writ court or a Supreme Court to decide a matter can substantially get reduced. These are very early stages. Every institution has to evolve. And that is where I think I have a great faith and hope that given the earnest effort made by the government to make it one national structure, bring in sufficient number of judicial members into the tax tribunal, adopting tax technology, and also look at how the issues can be, because in the initial stages of GST functional, a lot of flab will come. They may not require a deep interpretation of the law. They should all be removed at the earliest point of time. Then the core principles will come up for decisions. We need to look at exactly how are they getting addressed. I don't know how many of you in this room see some of those decisions of the European Court of Justice. For example, we had vouchers taxation. I think Mr. Shivdas has argued in the Premier Sales Corporation. Of course, the whole matter was decided on the concept of a mutuality. Mutuality is a huge issue, will come up even in GST. Deemed supply will come up in GST. We will have valuation, related party transaction. 1210 circular is one thing which has really provided some relief. But you have seen when input tax creditors were eligible, no business can be 100% certificate eligible for input tax credit because they are going to have non-taxable transactions too. So how do we address not the corner cases, but substantial number of cases? Those are matters which will come up before the tribunal for a substantial jurisprudence to evolve. I think I will look for one where two asks. One, I think while the initial period will be flooded with cases, one way of looking at is bunching. Two is basically where a coordinated bench has taken a well-reasoned order, the other benches should naturally respect it because the law is one. The perimeteria concept will work on this. Notwithstanding they are sitting in different states, there has to be respect to each other's decision. And in important cases, only the principal bench should step in and decide the matter. And more importantly, I think what is very, very important is some of the principles which has been laid down by the high courts in the interregnum when the tribunal has not been constituted. I think wherever the department has not chosen to file an appeal and those decisions have reached a finality, I think in true spirit of following judicial discipline, not only the jurisdictional benches, even the benches which are outside the state of the high court jurisdiction should give due consideration before arriving at any decision, the least of which I expect is the contrary decision to those judicial rulings of the high courts. With all these things, I am hopeful that the GStat should definitely give the relief what the taxpayers have been expecting. But aspirationally, as Mr. Shivdas said, I think this tribunal should contribute to the jurisprudence because GST, today what we are looking at is very, very rudimentary level engagement of the dispute resolution because some officer didn't want to follow the principles of natural justice. If you look at 30% of the cases will fall on that. Is it worth time of the judicial time to be wasted to be remanded back for the person to apply his mind to give a notice or to hear the party? I think that's not really the time. It's time now, I think we need to really look at GStat with the future where key principles will have to be determined so that some of the lawmaking process also get refined. Today I've seen some of the decisions that really led to the government acting in terms of those judicial findings. Sometimes government also goes the other way around, but it's fine. But at least there is a certainty. I think that way I will look upon the GStat to be a real solution for the taxpayers.
Phenomenal, sir. I don't think we can expect a better clarity than this. Now I completely agree with Shivdas, sir. Of course, I agreed with him earlier also that we need you in all the bench, not only in one bench. But
most on the principal bench.
Yeah. Sir, I think I'm conscious of the time. It's 1:15. I think if there are any questions from the audience, I think we will take that.
Badri has limited to 3 questions.
Good afternoon, sir. Good afternoon, sir. Thank you very much. Two things, sir. So 2 things. Is there any time limit, like now in GST, a very progressive step? I've been practicing IDT now for 23 years. They have made a time limit to issue the notices and orders. I know that GStat initially will be saddled with a lot of cases. Down the line, when the things get streamlined, as yourself said and Shivdas sir said, can we statutorily enforce the tribunal to give the rulings that will, contribute to ease of living and, global investors and all that? Because today the CStat, I am having a matter, that appeal is filed in 2011, point number 1. Point number 2, Central Excise and Customs, the classification and valuation issues were appealable directly to the Supreme Court from CStat. We don't see similar provisions. I know that it could go to a principal bench, but rather than principal bench and then again High Court, Supreme Court, any particular wisdom, I know there is a clause that as any other matter as the government may decide or something like that. So these 2 things, if you can kindly give your insight from a tribunal perspective, sir. Thank you.
I think we need to look at GStat. I think the law has been clearly worded as far as possible. They are more of sort of a persuasive thing, a directory or a mandatory provisions. I think putting a timeline to the tribunal will be difficult. Even when we introduce the GST provisions where we have a sunset clause for timeline for issuing notice and adjudication, you have seen the experience, and we have now reinvented 74A. And in customs law, when we brought in the similar provision, we set a discretionary power to the commissioner to extend it in reasons to be recorded, etc. There are always 2 parts of it, but I think it's good to have a timeline. But I think probably we will give some time for the GStat to settle down, to function, because I foresee that bringing one uniform culture, what Mr. Shivdas has mentioned about it, you see, tribunal is the first place we are going to truly have a convergence of the state and the central tax administration sitting together, where you have an opportunity for the person to have an adversarial proceedings being argued on equal platform. It's not going to be like a departmental adjudication, it's not going to be like appearing before an AAR, it's not going to be like a triple AR. You're going to have both the parties put together views, and you are in a position to decide the matter in an appropriate forum with appropriate experience and expectations. So probably I think putting a timeline will be too much in the line, but it should be looked upon as how, because technology is going to bring clearly as to how is the pendency in each of these benches, how many of the cases are being disposed of every day, things like that. We need to look at how much judicial time they are spending in terms of hearing and disposing of, but I would leave it for the tribunal to have a little flexibility in the initial period to decide the matters, because of this sheer volume of cases, number of cases will come before that. Now coming to the issues with regard to classification and valuation, where uniformity will have to be there, we had provided 35L in excise law and implemented it through that. It has its own plus and minuses. We have seen in the service tax with regard to whether a particular matter relating to taxability should go before a Supreme Court or an High Court. You have seen the 35G issues, each High Court taking a different view finally, and Supreme Court saying in a particular way. I think we need to understand one thing. GST is a subnational tax. Ultimately, states will have a huge interest in point on which they have a point of view. They would comfortably prefer an High Court to examine a tribunal order in their respective state jurisdiction rather than going to Supreme Court, for the real reason that time taken will be too high in Supreme Court, because there are already too many issues which Supreme Court has to deal with. And normally the entry to the Supreme Court is through an SLP route and a civil appeal. SLP, you know, it's a hit or miss chance. Civil appeal will take its own course of time to get it admitted and all. I would say still, I think given that every state is an important stakeholder, I think giving a jurisdiction to High Court is a far better manner in which we bring the fusion and take it to the later. But those matters which are going to be given to the principal bench, what Bala has issued a notification yesterday, I think gives somewhere the direction. Should any time a matter should having a pan-India implication should be decided by the principal bench. And of course, this will be subject to a judicial scrutiny later. After all, executive can wish anything, but it will pass through the test of the constitutional principles. But I would only say that I think leave it to the High Court would be a better option than push everything to the Supreme Court, because we have seen on valuation classification matters could pend for a certain amount of period. And there again, even a Supreme Court decision has undergone some changes. You have seen the canon, you have seen the review petitions. So I think we will leave it to the High Court is my sense. That's what I would say. I don't know. Mr. Shivdas can add to that point.
No, it may not be advisable to fix timelines for the tribunals to decide matters, because practically the tribunal is an extension of the courts. Courts will not like timelines to be fixed. You can have directions given by the Supreme Court to say you decide within 6 months, you decide within 1 year. As DPN sir says, it will go by the internal functioning of the tribunal. So I don't think you will have any situation to say that you should decide within a particular period. Even today you have tribunal to decide within 1 year or 2 years, there's some provision, but tribunal hardly does it, because it has its own constraints. The second aspect of appeal going directly to the Supreme Court, if you look at the provisions today, excepting the place of supply issues, every other issue will be with the respective tribunals, excepting place of supply. Place of supply alone will go to the principal bench, in addition to its own jurisdiction. Now, I have my own concerns that even place of supply should go there, because if you look at place of supply, every place of supply issue will not have a pan-India impact. You see, what is place of supply? Whether yours is an export or not an export, whether you are an intermediary or not, whether you are doing goods, services in respect of goods which you receive, these don't have pan-India implication. These go by the facts in a particular case. So you should always leave it to their respective tribunals and to the respective high courts. Therefore, to what extent the principal bench would be right in saying that all place of supply issues from Rule 12 to Rule 14 should go to the principal bench, I don't think that may be right. But as of today, as the provisions stand, place of supply issues alone will go to the principal bench. Then from there, I think it goes to the Supreme Court. That's what they have indicated. Maybe they can still move to the High Court I think you should somewhere draw the line to go to the Supreme Court at some point of time. If you say today, if you look at the attitude of the Supreme Court, when I say attitude, I'm saying it in the correct sense, not the wrong sense. They're very, very reluctant to entertain appeals on tax matters before the Supreme Court. They're very, very reluctant. They are saying we are constitutional courts. We are supposed to decide constitutional issues. Whether a tax dispute is particularly there, right, wrong, you have a tribunal deciding, and you have chosen not to go to the High Court, therefore we will not interfere into it. It's a absolute hit and run in the Supreme Court in all matters, whether it is SLP or whether it is civil appeal. Therefore, it is always preferable to go to the High Court from the tribunal. That will give you some sort of a breathing space for you to set out your matter. Otherwise, if you have to depend on Supreme Court for every matter to be resolved, then it is unlikely the Supreme Court will do it. So that is going to be a big challenge. So it should go to the High Court. Very few issues on Pan-India should go to the Supreme Court. Otherwise, it should be with the, of course, there will always be a principle that other benches' decision should be respected by every other bench. Then the respective High Courts, one High Court's decision being took out with other High Courts. All that will always be there. But otherwise, thinking of going to the Supreme Court for every tax matter, I think should be avoided in the least.
Instead of time limit, I may suggest that the industry should ask for interest waiver. Pendency hurts in terms of interest costs. So if you say in a deserving case, like an industry, classification issues and all, which is overall common, if there's an interest waiver capability vested with the tribunal and it's judicially applied and granted, that will solve your problem. Why you should compel the tribunal to give you within time? You ask for interest waiver, that's the only matter of hurt in indirect taxes with 18%. You are worse off in 5 years by equal to the amount of tax almost.
Wonderful, sir. Yeah. Thank you so much. Yeah, wonderful, sir. We can take one last question.
Sir, my question is with regard to filing appeal before the stat. Multi-state classification issue adjudicated by common adjudicating authority, whether respective appeal lies with the state bench or any single bench.
This is one question which is also bothering me for some time now. I think we have 2-3 flavors to this. It's not a very easy thing. From a taxpayer point of view, I think what you raised is absolutely correct. Now, if DGGI investigates, it can have a multi-state jurisdiction and it can club together multiple registration, and on a single issue or for a particular period, they can issue one show cause notice. That's one part of it. Then, who will adjudicate the show cause notice? We have found a solution by appointing a common adjudicating authority for specified cases, and we have appointed certain joint commission, additional commission, the central jurisdiction, who will be the common adjudicating authority for DGGI investigated cases. Now, if it is a central jurisdiction case other than DGGI involving multiple states, there is respective jurisdiction will adjudicate the case, even though the issue may be common and similar. There is another angle to that, is the state level administration. Now, when a common adjudicating authority is appointed, it works under the power and jurisdiction of a jurisdictional controlling officer who has the power to review. In as much as the taxpayer has got a right to appeal, the jurisdictional authority has got a revisionary power, or review power. Now, we need to really look at how it is going to be clarified. It will require a certain amount of consultation with the president of the CSTAT. While law will evolve, up to the first appellate authority, they have decided where will be the first appeal will lie against the common adjudicating authority, the jurisdictional officer. Now, who can file an appeal? Either the aggrieved taxpayer or aggrieved departmental commissioner. You can be in another state also. You can send a request to that jurisdiction and ask the commissioner of the person to file an appeal on his behalf. But I think these are going to be challenging issues. There may not be a perfect solution. A workaround can be brought in the due course. In fact, when automation is being talked about, in fact, this is an issue on which I have already flagged it to the GSTN team which is looking into this online filing of appeal. The taxpayer should know where exactly is required to file an appeal. So, the moment an adjudication order is passed, the preamble of the adjudication order itself should say that this is an appealable order before a tribunal. Merely saying a tribunal will be not sufficient. Which of the bench of the tribunal where the appeal will lie? Either you say it upfront, or through the back-end system, you need to redirect that appeal to the jurisdictional bench with a clear communication open to the taxpayer as to where this appeal is going to be admitted or heard or prosecuted further. I think clarity is expected. The policy wing is working on something. Hopefully, I think all the scenarios we should look at it, probably from the BCIC standpoint also, you can take the guidance from Shivdas sir and probably look at the scenarios and what is the existing disposal and where there's a challenge will come in terms of the second appellate authority level. And even there where first appellate authority some directions have been given, how is it impacting the taxpayer in terms of pursuing the appeal. But my only advice will be, keep the sensitivity part of the states in mind. While it may be desirable that you will like to have it in one place, ultimately GSTAT is a combination of both the state and the center, and that sensitivity should be adequately factored into when we seek options and solutions.
Absolutely, sir. Sure. Thank you so much, sir. I think each one of us in this room will definitely go out with more knowledge today and feel more knowledgeable. In fact, the first sessions, in the first half of the sessions were phenomenal. And in fact, thank you so much for each one of you to have spent this time and sharing your advice, knowledge with us, sir. Thank you so much. I think I'll call Badri to... Yes, small token of memento, sir, from us. So before we disperse for lunch, we have a very important event from a BCIC perspective, which is we are releasing a book on the occasion of GST 2.0. I request DPN sir, PVS, as well as Shivdas sir to release the book. Yeah, sure.
We have amongst us the authors who have contributed to this also. It's basically a book on GST jurisprudence, sir. About 50 plus rulings, which we believe are relevant in one place. Yes, sir. Yes, all three of you, right? Right. So may I request Siddesh? He's here. Siddeshwar, yeah, please come. He's one of the authors. In fact, he's the one I said, Siddesh, we have to release a book, and he said, okay, it'll be done. So it is him. Then we have Banumurthy. Has he come today? Okay. Mukesh? Okay, Mukesh is also not here. Siddesh, please come. Raghavendra? 4 people who did this. Take it. Siddesh is the only person with us. Siddesh, please come. Thanks to the president of BCIC and the senior vice president who actually took that time to write the foreword for this, and yes, Mr. Ravi for the entire design piece. Thank you, sir. Thank you, both of you. A very big thanks to both of you. We break for lunch now and get back for the next panel discussion.